Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, everyone. Ira Epstein of Linn & Associates with your metals market update, and this is for Tuesday, the 28th of February, 2017. Time right now, just after 2:20. All right, what a day. We're going to see tonight President Trump's speech between the Congress and Senate, in other words, the joint session, as it's called. What he's going to say is anybody's guess. My hope is that he's got some specifics. Details is the word I'm looking for, not just that we're going to get together, we're going to make America great again, so on. We're going to take defense spending up 54, 59 billion. I need to know how we're doing that, and I think that's what the American public is looking for. This is not a budget speech. Therefore, getting a lot of the specifics isn't quite yet. It's still about 2 weeks away when he said at March 13th he's going to give it. But it will have a tone to it. It will tell you where he's headed again. I mean, he doesn't mince meat on that. And we'll find out how the metals and the stock markets react. This is not a bad down day in the stocks at all. So the markets are still looking favorable overall in a lot of the stock indices. Metals have sold off. Silver continues to gain on gold. And of course, the copper market is stuck in that melees between what's going on at the Escondida mine in Chile, what's going on in Indonesia at the Grasberg mine, and away you go. By the way, I think in one of my tapes yesterday, as I did the video, I said President Bush. I admit sometimes that goes Trump. My brain goes, is it Bush, Trump, Obama? Who is it? I'm new with that part. I've got to get my brain set up. In looking at a gold weekly chart, you have these arrows that still say higher lows, higher highs. Now, we have not yet turned the 18-week moving average over the 100-week. Being a weekly chart, I'd like to see that. Prices are staying over both, so those are the general support zones. As we look at a daily area chart of closes, you've gone from 1191 to 1258.80, and from yesterday you've sold off so far about $6. Now you're going to close this market around the 1254 level. I looked at the settlement, so it's still going to be down in this general area. When we take a look at a daily bar chart with nothing on it, you can see how the market looks, and on an overall basis, you still look like a pattern that's in an uptrend to me visually. When I come to my swing lines, they validate that. Coughing there. Higher lows, higher highs. You'd have to take out 1226.80 on the current chart formation to break that pattern of higher lows and higher highs that is bullish. Support in the market way back here at 1237.70, which is about $15 away from the current quote. In terms of Bollinger Bands, you know what I'm going to tell you. Why would you ever buy into an upper Bollinger Band? I can't think of a reason. I'll be honest. That's what I teach, and that's what I practice in putting out recommendations and teaching people. So I still see good support in this market right there. But if you take a look, you're losing momentum, but you haven't lost the embedded reading. You still got an 81.38 reading, and I know the settlement price is a bit higher than that, so you're going to keep it. But it's starting to fluctuate, and intraday when you got down to the lows in the 1250 area, you did lose that embedded reading. So just a point to be a bit careful of. In the gold ETF, you've lost the embedded right here with the market even up a nickel. It's a warning sign that prices might want to head back to this 18-day average, but you remember, you can lose an embedded reading for one day. You can get it back the day after, which is tomorrow. So I don't know what Mr. Trump, President Trump, is going to say, and I don't know the impact of it. Just a hard market to take a position on. The gold miners has now sunk, like I said yesterday, it might do. I didn't predict it will or won't. But I said the next support, if it keeps going under the Bollinger Band, and you can see right like that, is that 100-day average, and that's what you're doing. You're under it. You're in a bear trend in the miners. You've got a market that's weakening a bull trend in the GDL, and, of course, the futures are still embedded but weakening. When we go to the gold-silver ratio, it's at 68.09. The most recent low, 68.24, so it's trying to be under that. And this was that spike low back here. So you're still about 70 cents away, but I'm going to stay what I did back up here. When the market started coming down, I said, I think you're back into that period where silver is stronger than gold, and I think that the chart has proven itself. In the May silver, you can see how the market is flirting with losing some momentum, but it's still embedded, a lot more than the gold, by the way. The market is hugging and riding and hugging the upper Bollinger Band in an embedded situation. Until you lose that embedded reading, this market is bullish, and you still have that embedded reading in SLV. So unlike what you're seeing in the GDL, you've still got it here. In the copper market, you're back up to and over the 18-day average, and in the process, you now got higher lows and higher highs. So the trend is back up as long as you don't take out 266.75. Support's right here at 271.20, and you're 271.70 right now. Momentum's sort of flat in the chart, and you're just sort of back and forth. In the platinum, don't be surprised. You got overbought over the upper Bollinger Band and slam right back into it. What are the odds of staying above or below these black dashed lines? Remember, 5% of the time. So you've got to think of that as resistance, support, and then you learn how to use momentum with it. A lot of people think to use Bollinger Bands by themselves. I don't. I love a momentum index with it. It's almost like a pivot point, if you know what that is, and I'm doing a tape on that shortly for you. In looking at this, you've got lower low, higher high. I don't know what to do with that palladium. The bias is down because you're under the 18-day average. Momentum's down. I see a sideways market without really anything definitive. Now in the dollar index is trying to come back up here. Notice the game. The game's the 18-day average of closes. What's the trend? It's up. If this market can lift from here, you get a good idea if you can take out 101.20. You could have another 50 points up to the upper top there. Is the market overbought? It is not. It has corrected that condition. So it's in an uptrend, looking at this point pretty good, going into, from what I can see, the end of the close here in a favorable position. You put it all together, you got a game, and you try to figure out what to do with it. One of the ways to work is putting tools in your hands, and I can't explain how important that is. It is not just charting, it's other technical tools. It's parts of a puzzle that you try to put together. Consensus is a neat publication. All over the country we have, be it brokerage firms that are stocks, commodities, ETFs, derivatives, whatever. You get these names all through here. The government reports are in here as well. And you see all them. A lot of these people contribute to this publication. Articles, and they break them down by the metal markets, the softs, so on. Then they take those articles and they create what they call their bullish consensus. It comes out Tuesday. How many of the letters are bullish? How many are bearish? What's the percentage? So you get a reading on that. You get a user ID and a password so you can sign in for your 4-week trial, and away you go. Can't think of a better way for you to learn a little bit more. And that's what I try to do here with these offerings. I don't get paid for any of these offerings, by the way. These are not paid ads that you're seeing. I go to these companies because I think they'll benefit traders. That's all. It's a tool. I'm not telling you they're the greatest thing around. I'm not telling you they're going to be right or wrong. It's just another tool. How do you get your access to it? It's really simple. You're going to call us at 866-973-2077. You can also hide on the internet incognito. Go to our website. You'll see a carousel, free offers. Click on it. There'll be a form there. You can click right up here. Same thing. Form will be there for consensus or underneath us. Choose whatever you'd want there. We'll take it the rest of the way. I'm Ira Epstein. Thanks for watching. Tune in to the president tonight. It's going to be interesting and, of course, entertaining. Take care now.